Hey everybody, Jamie Trull here. Hope you're doing well. So we are going to be talking all things PPP today and specifically PPP tracking. And this video is for those of you who are employers specifically. So if you have had employees on your payroll or have them currently on your payroll in 2019 or 2020, this video is for you. We're going to be walking through a tracker that will help you. If you don't have employees, if you're a sole proprietor or a self-employed person or an independent contractor, or maybe an S-Corp without employees, I have another video that is going to be better suited for you. It is linked down below, so go click on that and watch that one, okay? But for those of you who are employers, stick around because we're going to walk through something that is going to be super helpful for you while you're trying to navigate this PPP forgiveness world. So, as I always have to say when we start out with these things are changing rapidly, and there could be new guidance by the time you're watching this. So make sure that you're paying attention. Again, I will update down below if anything new has come out since this time, okay? And potentially even link to a new video if I have one, if something has changed. Right now, Congress is talking about making a few different changes, but we don't know exactly what that's gonna look like, but that would change a few of the things that we're talking about today. However, we have to go based on the rules that we know as of the day. So that's what we're going to talk through today. So first of all, if you haven't watched any of my videos on PPP, I have several. Make sure you subscribe to my channel. After this one, you can go check out all of the content I have out there. I have videos on PPP. I have videos on economic injury disaster loans, unemployment through pandemic unemployment assistance, all kinds of resources to help business owners right now and self-employed people through this challenging time. So make sure you have subscribed to that channel and also go check out my Financial Literacy for Women Business Owners Facebook group if you are not already in it. Again, the link is down below. Okay, so let's jump in. I have a free resource for you guys. If you want to jump over to balancecfo.com/PPP tracker, it's up on the screen right now. And you will want to grab this. It is completely free. I've spent far too many hours working through this with some other CPA friends of mine, Kelly and Bree, who have helped tremendously in this. And we have come together and put together a process that will work for you, okay? So I'm gonna walk you through each individual tab of this worksheet. And I first wanna give you guys a little bit of a pep talk, okay? There are a lot of rules around PPP, and I understand it can get really confusing, right? And if you looked at that application that came out, so there was a Treasury application for forgiveness that came out on May 15th. That's what this video is going to walk you through. Essentially, this spreadsheet is going to calculate that entire application for you, and you'll be able to hand it straight on over to your bank and say, here you go. So that's really the intent of the spreadsheet that we have put together, okay? But you might have opened up that application and said, oh my goodness, this reads like a tax return, because it does. It really does. It gets into FTE reduction quotients and salary wage reductions and all kinds of craziness. So we're going to simplify that for you. So just stick with me. I promise when you get in there and you get used to it a little bit, you'll notice that it's not as difficult to use as you might potentially think. So we've tried to really streamline it and make it very easy for you guys to just input what you need. Okay, so we're going to jump on over into the file right now, okay? So the first spreadsheet that we're going to jump into is the one that says Start Here. So here we are. We're in the Start Here. And basically this kind of gives you the lay of the land of this worksheet, okay? So it just talks about the purpose. We have a legal disclaimer talking about when this information was current as of. The contents of the workbook are laid out, and also the fact that basically throughout this workbook, you're going to see multiple different colors. So you're going to fill in those colors if they are yellow, all right? The cells are for you to fill in if they are yellow. Anything that's in this blue color is going to be automatically filled in for you. So you won't even be able to change it even if you wanted to. Okay, so we're going to jump through this, but let's look at the tabs really quickly. So the first couple of blue tabs, all of these, there's nothing for you to fill in on, but I will jump over just to show you. So this tab is the actual loan forgiveness application. You will look at the application and it looks just like this. And you'll notice that nothing on here is in that yellow color, right? That's because everything on here is going to be pre-populated based on the information that you provide in other tabs in the worksheet, specifically in the yellow and orange tabs in the worksheet, okay? Same goes for this loan forgiveness application Schedule A. This is also something you'll have to turn in with your loan application. This will be fully completed by other information you put into the loan application, okay? Okay, so we're gonna start over on step 1, which is the PPP loan tracker. So you'll notice that there are different steps. There are 4 steps in this process that you'll go through and 4 different sheets that you will fill in with information. So we're gonna start here and you'll notice that there are several different yellow highlighted cells that mean you need to put a value in there. So the amount of the loan received, I'm going to walk through an actual example with you because I think that's the easiest thing to do here. So we're going to say you got a loan of $40,000 and that loan came through on the 25th, okay? And it'll automatically calculate for you the end of the 8-week period. Now, because you guys have employees though, you have another option. It was introduced on this forgiveness application that there's going to be an alternative covered period for payroll. So we've been talking about this entire time that the covered period, the forgiveness period, starts the day you get the money. And that's still true unless you choose to start it on your next payroll cycle. So the beginning of your next payroll cycle. You can only choose that if you pay payroll every other week or more often. So weekly or every other week, you can choose that. If it's less often than that, then you won't be able to choose that. But let's say that you do biweekly payroll and typically a new payroll period starts on the 20th. So you would pay it, you basically run payroll from the 1st through the 15th or something like that. So let's put in that first date. So basically you could have your payroll start from 4/25 to 6/20 or from 5/1 to 6/26. In my opinion, I think it's going to be easiest for most businesses to go with the alternative covered period for payroll. You can't use it for other non-payroll. This only applies to payroll, but I think it will be much simpler to track when it comes down to, the actual amounts that were paid versus accrued in the period. It can get a little bit complicated. I think the easiest thing for you to do is going to be to select that alternative covered payroll period. And then it's easier to take those amounts directly off of your payroll reports because you're not going to have a period in there where somehow you've got part of it that would be forgivable and part of it that wouldn't, right? So that's really what that helps do, is to simplify it at least a little bit, right? And we could use that, I think, with this. Okay, so now we're going to jump into 8 here, okay? Was the EIDL advance already subtracted from the PPP loan amount received? So this is assuming you have an EIDL advance. If you don't, you can skip this question. But what this is really pertaining to is those of you who got the economic injury disaster loan, there was a grant/advance that came with it of $1,000 per employee. If you received that, it was money to you, right? Money that you would get to keep. Now, the only exception to that is if you got PPP, you basically can't get the same free money twice. So what it said in the CARES Act is you're going to have to actually subtract that EIDL advance or grant you received from the total amount of PPP forgiveness that you qualify for. Okay, so let's say our entire $40,000 loan qualified for forgiveness. If we did everything perfectly and we got the whole thing qualified for forgiveness, it's going to reduce our amount by the amount of our EIDL advance. And then that amount is essentially going to become a loan over 2 years at 1% interest, so over the PPP terms. Or you can pay it back when you apply for forgiveness and find that you have that. You can pay it back right then if you really don't want to have a loan. You have those options. But let's say that the answer here is no. In some cases, what this question is getting at, for some of you, you would probably know if this is true. They may have already subtracted your EIDL advance from your PPP loan. Most of you, that's not the case, but if you told them on your application, I've already received an EIDL advance and gave them that amount, they may have gone ahead and subtracted it and given you a lower PPP amount. So in that case, that's why this question is here, because you don't want to get it subtracted again, right? So we want to make sure that we're only subtracting the EIDL advance if it needs to be, meaning if it hasn't already been subtracted off your loan. So most of you, though, will probably you more than likely know if your EIDL advance was subtracted off of your loan. Then we're going to put in the advance amounts. Let's say we had 4 employees, so we got $4,000. Did you have W-2 employees during any periods in 2019 and 2020? Yes, we did. And the payroll period selected. So this goes back to, do we want to use the regular covered period or do we want to use this alternative covered period? I'm going to use the alternative because I just think it's going to be easier to manage. Okay, so now we're going to come down to owner pay. And this is the only place in here you're going to put in owner pay. There are some other tables in the back that are for employees. Do not put your owner pay on those. The only place that it goes is here. If you put it somewhere else, it's going to kind of double count it, and we don't want that. So let's say, for the sake of argument, you're an S-Corp. There's also a place if you're a partnership or a sole proprietor to put in those amounts. But let's say that you are an S-Corp. And let's say that you typically, so you're limited basically to 8 weeks worth of compensation based on 2019. That is likely to be just W-2 wages, okay? Because that's what your PPP loan was based off of, was W-2 wages. That's really your salary. That's your payroll as an S-Corp owner. Any other owner draws you take out really aren't salary. You're not getting taxed payroll taxes on those. They're more investment income, so they wouldn't really count for this. So we need to look at what was 8 weeks worth of your 2019 W-2 wages. So you can go back and look at your W-2s, your K-1s to figure that out. But let's say you typically paid yourself $1,000 a week as an S-Corp owner, i.e. a total annual salary of $52,000. So we're going to put $8,000 in here for you. Okay, now if you pay yourself more, your limit is $15,385 for any owner. You cannot pay yourself more than that. Now, for employees, you can give employees bonuses and you can give employees raises. That's completely fine. But for yourself, you can't. They actually wanted to make sure that they could not give owners a windfall. Like owners wouldn't be able to give themselves more money than they would normally make in an 8-week period. So that is why they limited that. Okay, so we've entered all these questions up here. We can skip partnership and sole proprietorship because those do not apply. And then we're going to come down to the spending log. And the only things that we're going to put on the spending log are the things that are eligible for PPP. And this is going to exclude gross wages for employees, okay? Those are going to come in on other tables in the back where we're going to list out our employees and put in the information from our payroll reports. But here, we are going to basically put employer paid benefits, employer funded retirement, state local employer taxes, rent, utilities, mortgage interest, interest on debt obligations. Now remember, employer taxes like Social Security and Medicare taxes, employer portion of those taxes are not something you can use PPP for, unfortunately. Now the employee side essentially gets picked up because you can use PPP for gross wages, so you're good there. But the employer side is something you have to bear yourself. Okay, so let's fill in some information down here, shall we? So I'm going to go ahead, I've already filled in some information. I'm going to go ahead and just throw it on in here so that we can have something to go by. But so I've put all this information in. Again, you're just going to pull this from whatever your accounting records you have, right? So you're going to pull in the disbursement date, you're going to put in your vendor, you're going to put in the amount that you spent, and you're going to put in the type of expense, okay? And this is a drop-down box where you can only pick one of those things that is listed up here, okay? And then you're going to also say, yes, I have the support. Hopefully you will check yes on all of those boxes. And you're going to put the bank account because that will help you when you're going to pull the bank account information that you need to provide to your bank or to get forgiveness. So you have all that there. So that's going to kind of add up and give you $10,650 of these other costs. Okay, so notice we have 2 months worth of rent. We had rent on the 1st of May, rent on the 1st of June, 2 months worth of utilities, and several months and a couple of months of payroll, retirement, and healthcare contributions that you made on behalf of your employees. Okay, so you would put whatever those are for you in there as you paid them. And then you would see kind of how that shakes out. Now, for all these tabs, you're going to see this box at the bottom. This is a good thing to read. I know it looks like a lot of information, but if you have questions when you're looking through this and you're wondering what goes where, this is going to give you some more information. The other place to look if you have questions and you're wondering what we're kind of getting at with some of these questions, in the very back of this workbook, they're the green tabs, you can actually see this appendix, which gives you some links to the actual guidance. And then we've screenshotted in here for you the actual application, okay? So different parts of the application that you can go and jump into and take a look at, okay? So that is in there for you to make it easy for you to kind of cross-reference to make sure you understand exactly what it's asking, because there are a lot of interpretive things within there that might be helpful for you to look at if you are tripped up on something or want to look into something a little bit more. Okay, so that's the loan tracker page. So that's the very first one you do. Now let's go to the next one. Now we're going to start looking at individual employees, okay? So this is the FTE reference period calculation tab. What is this? Let's talk about it. So one of the things that is important and can reduce forgiveness is if you don't have the same number of full-time equivalent employees averaged out over your 8-week period as you did compared to a previous period. Now, what previous period do you compare to? Well, of course, Treasury gives you a lot of choices actually here. So you can choose probably which one is most advantageous to you. So if I were looking at the FTE reference period calculation, I would probably pick the reference period where you had the least amount of employees. So let's take a look at our options here. And there's a drop-down box, again, in yellow. And you can drop this down and you can choose either the period from February 15th to June 30th of 2019, January 1st to February 29th of 2020, or if you're a seasonal business and only for a seasonal business, you can pick a 12-week period between May 1st, 2019 and September 15th, 2019. And that can be your reference period, okay? So what you would do is pick one of these. Well, let's say we had a bunch of employees for some reason last year and we restructured our business and we got rid of some. So maybe the best one for us to do is going to be January 1st to February 29th, 2020. That is going to automatically then tell you how many number of weeks are in that reference period. So again, I'll just show you really quickly. If we'd picked February 15th to June 30th, that's 19 whole weeks, right? That we would have to be looking at. In this case, let's just go with January 1st, 2020 to February 29th, 2020. Hopefully we have those records pretty readily available. Okay, so when we are putting in this information then, the other question here that you'll see a little yellow box for is do we want to default to the FTE alternate method? Okay, what? So there's a discussion again down here on what that is. But ultimately what that means is the Treasury has given a couple of different options for calculating full-time equivalent employees, okay? A full-time employee for the purpose of this calculation has been clarified to be 40 hours a week. And the way that you would typically do that is you would say, okay, well, I had an employee who worked 10 hours a week on average, 10 hours over 40, that's 0.25 of an employee. So they would be a quarter of an employee for that person, okay? What the Treasury has said is, you know what, we're going to give you a little flex here. If you want to use 0.5 for every week that a part-time employee worked, you can do that. You can kind of simplify the process. So basically you can do the actual method as well if you want to and actually go into the hours, or you can just estimate it based on using 0.5 for any part-time employee for the number of hours that they worked and average it over that period. So what we've done on this tab basically is allowed you to do both. So you can check and see which one is going to be most advantageous to you. Now, if you decided, you know what, I don't even want to deal with, going into my hourly employees and actually listing out what the hours they worked were every week during this reference period, especially if your reference period is maybe the one that has 19 weeks, you can just say, we're going to default to the alternate method and just click yes here. You'll notice when I did that, if you saw it, did you see it? Everything here turned gray, okay? It all turned gray. So If you want to kind of skip this step and not put in all these hours, you would mark yes here. If, on the other hand, you're worried that if you did it that way, it may not end up being as advantageous for you and it might actually be better for you to do the whole calculation, then I want you to click no. In that case, now we're yellow again, okay? But you can go in here and enter in that information. So let's quickly do let's do a little run through of what we would put in here. And I'm just gonna copy paste. Remember, everything in blue is gonna automatically populate. You'll put your salaried employees up here, your hourly employees down here. So let's start. Let's say we had 2 salary employees. Jon Snow and Arya Stark, they are our salaried employees and they worked the entire reference period. So Jon is full-time, Arya is part-time, and they worked the entire 8.5 weeks of the reference period. Now, you could also have them work six weeks or something like that, however many they actually worked during that time period. But if they were on payroll, basically, if you had been paying them basically throughout that entire time, you hadn't laid them off in the middle of it, then they might be there that whole time. Now, if you hired them halfway in, maybe they were only there 4 weeks, whatever it is, but you would answer however many weeks they were there, okay? And then we're gonna come down to the part-time employees. So we're gonna put in our 2 part-time employees, Tyrion Lannister and Joffrey Baratheon. I feel like I look super nerdy right now with these references. Some of you are laughing. Some of you are like, what are these names? I promise this is what happens when I do YouTube videos at 10 p.m. at night. So this is what you get, you guys. And let's say Tyrion, he works six weeks he worked during that time period. Joffrey worked 8.5. And then what we're going to do, again, because we clicked no up here, and we're going to do the actual calculation. So we're going to put in, for those 8.5 weeks only, we are going to put in their hours. So let's say they worked these specific hours, okay? So that's going to calculate out what they are. So Jon, he's a full-time, an FTE of 1. Arya is 0.5. Down here, you can see the slight differences, right, between these calculations. Specifically for Tyrion here, he's got 0.7 if you were to take the actual method and 0.4 if you were to take the alternate method. Now in this case, for this tab, usually it's best to take the alternate method if it's lower, because that usually means that your total headcount that you're comparing against is lower. But you also have to go do that same comparison for the 8-week period, and then you have to choose the one that makes the most sense. You have to be consistent. Either you do the actual or you do the alternate. So we're going to do that other tab for the 8-week period before we make a decision on which of these calculations we want to use. But you can just leave it just like this. So you've entered in all your information, and that's all you need to do on this tab, okay? Okay, so now we're jumping over to the Payroll Frequency tab. Now this one only has a couple of questions on it, but you'll see that step 3 actually has a second part to it. So we'll get to that in a minute, but the first part of step 3 is to choose the type of payroll. So do you pay payroll weekly, bi-weekly, twice a month, or monthly? Let's say we do bi-weekly. Okay, now make sure you change this because it will default to weekly. So if you don't pay weekly, you want to make sure to change this or else your calculations are not going to work. Then it asks us just a couple of weird questions, but the reason that these questions exist is because they are important questions in the Treasury application, and they can make a difference on how you proceed in that application. So one of the questions is, did your number of FTEs increase between February 15th and April 26th? Did you add additional employees net, okay? For most people, you probably reduced employees versus added them. So let's say the answer to this is no. This second question is kind of an interesting one. So this is something they added in the Treasury application. But FTEs that meet the reduction exception, you can put here. So what we're going to say is how many FTEs would have met these criteria. So if you tried to rehire them and you made a written offer to rehire and they rejected it, you have to have documentation of that. You also are supposed to actually report them to your state unemployment office. If you have documentation of that, they would not count against you from a FTE headcount perspective for the calculation of forgiveness. Or if they were fired for cause during the forgiveness period, so during that 8 weeks, or if they voluntarily resigned or requested and received reduced hours during the forgiveness period. So some people have maybe requested to come back at reduced hours, so that also wouldn't count against you. So you're going to put the number of employees that essentially that applies to here. So let's say we had one employee that just decided, you know what, I don't want to come back. And so we said, okay, well, we'll report you to unemployment. That's fine. And we'll leave it at that. And we have that documentation on hand that we can give when we request forgiveness. Now, if you've backfilled that employee, you don't even need to worry about that. Just put 0. If you have already filled that position, then you do not need to go through those steps necessarily. So you can just put 0 in here. Now, the third question is adjusted for the employees meeting the reduction exception above, right? So adjusted for that 1. Did you have greater than or equal to your February 15th, 2020 FTE count on June 30th, 2020? Okay, so what does this mean? This basically means that by June 30th, had you hired back to the same level you were previously at, and remember, we are held harmless for the people that we put up here that didn't want to come back or came back partially or something like that. So the answer to this question would be, let's say we would be, yes, I did hire everybody back by June 30th, right? It might have taken me, maybe I waited a month before I started to rehire during that 8-week period, but eventually I did hire them all back. And by June 30th, they were all back on payroll. Then I would say yes. And then my favorite FTE safe harbor applies. And that is a good thing, you guys. That means that even if our average over that 8-week period, even if because maybe we waited a month to bring employees back on, and so our average was down compared to the comparison period, that because we brought everybody then back by June 30th, they're going to say, that's okay. We're not going to hold you responsible for that. And we're going to not reduce your forgiveness for not meeting the full-time equivalent average headcount. Okay, so that's important. Now, in some cases, the answer may be no. So we're going to put no just, to see how this kind of works out in the calculation. Now, the directions down here are going to walk you through what to do on these orange tabs. Now, you only have to pick one orange tab. In fact, you can only do one orange tab. So whatever you picked up here as the type of payroll that you have, you need to go to that tab. Leave the rest of them blank. Just go to that tab. So in this case, bi-weekly, we're going to jump on over here to bi-weekly. Okay, this looks a little bit similar to what we were working with when we did the FTE reference period, but it also is a little bit different. So this is for the 8-week period. So you'll see that it has already selected that alternate covered period that we had put in on the first loan tracker tab. So it's telling us the start and end dates. And again, it makes it a lot easier when we can align that with our payroll periods. So in this case, I'm going to jump on over and I'm going to fill out kind of what happened during the 8-week period. So let's say our 2 dependable salaried employees came back. Yay. Okay, so John and Aria are back. They are going to be included on here, and we're going to put in all the information related to what we paid them. Now, you'll see these are, we'll start here. So, when we start those pay periods, the very first pay period is for week 1 and 2. So we're accruing for that pay period. And let's say that John makes a base salary of $2,000, and that's pretty much his entire salary, and that's his base, right? He makes $52,000 a year, so that's a base salary of $2,000 every other week. Okay, so now we're gonna look at Aria. Well, Aria, we didn't hire back right away. We actually waited a little bit. We didn't need her right away, so we waited until the second time frame to do that. And some of her earnings actually come from commissions and tips. So we're going to put those in. All right, so now remember how I said we had put 1 as to having one employee that did not come back? Well, it was our friend Tyrion. He decided not to come back, unfortunately. And neither did Joffrey, but we were able to find somebody to replace Joffrey. So we're going to put in our new employee here. So we hired Hodor instead because he's much more dependable than either of those two anyway. Now, we're going to jump in, and let's say it took us a little while to find him, so we started him on weeks 3 and 4. So he worked, during that 2-week period, he worked 40 hours. We're kind of ramping him up a little bit. And then he worked 50, and he worked $15 an hour, let's say. Okay, so you can put all of that information in here to kind of calculate out your payroll. So you'll see that similarly, you're going to have an FTE actual and an FTE alternate, and they might be a little bit different. And then you're going to have your average salary or hourly wage that'll automatically calculate as well. And this will pull to the next tab, which I'll show you in a little bit. Now, one thing I want to address on here, the one other thing you can do, one of the things that the new Treasury rules gave some flexibility on that we weren't necessarily expecting was the fact that now you can include costs that were paid during the period, even if they weren't incurred during the period. What does that mean? Well, a lot of you got that loan, right? And maybe you got the loan and 2 days later you paid payroll because you had a payroll period that was, due back from a couple of weeks prior that was incurred for a different time period from before you got the loan, but it was paid during that 8 weeks. And the question has been, well, can I count that or can I not count that? And originally we thought no, probably wouldn't count because the way that it was worded, it seemed like it had to be incurred and paid. They've given some flexibility, and now they've said that the cost needs to be incurred or paid. So that means that if you had a payroll run, perhaps that hit during that 8 weeks, even if it wasn't for that 8 weeks, you can include that in this number. So let's say, at that time, John was the only one that we had on staff. So his payroll run from the 2 weeks prior actually came through during the 8 weeks. We basically get an extra payroll run in that way. Okay, so now we've jumped on over into step 4, which is the Schedule A worksheet. So the Schedule A worksheet is something that specifically comes in the application. It's not something that you're required to give into the bank necessarily, but it is something that is part of kind of the worksheet behind coming up with the numbers that go into your forgiveness application. So this is probably the one that looks the craziest, but it's really not as bad as it looks. This is going to help simplify some of those crazy calculations that are in that forgiveness application for you. So let's walk through what we need to do here. So you'll notice that several things have already populated here. A lot of the things that are in those blue cells have already come through from the other tabs that you have filled in. So we can see all 3 of our employees that we currently have during the 8-week period are on here. It has told us that we are biweekly payroll, which is correct. It has brought in the average annual salary, and that's calculated based on the information that we put into that biweekly tab, okay? So it's going to calculate all of that for us. Now, once we've kind of reviewed that and taken a look at it, we can start filling in some of the information here for each of our employees. So importantly, a new employee hired after March 30th, Jon Snow, no, he was an old employee. We've had him the whole time, so we would put no. Neither of them had annualized salaries over 100K. There are special rules and limitations for if they are annualized over 100,000. And then we're going to go to Hodor down here. Well, he is a new employee, so we're going to click yes. And what you'll see happened, now I'll demonstrate again, but you'll see everything over here turned gray for Hodor. That means we don't have to fill that out. So when we take a look at this, if I go to no, then we do have to fill it out. If I say yes, he's a brand new employee, we don't have any comparison period. So for a brand new employee, it doesn't make sense to put in their average hourly wage for January through March 2020 because they didn't have one. So that's why it's really important that we're answering this question correctly. Okay, so now that you've filled in some of that information down there, now we want to come up here to this box. This asks about the salary hourly wage reduction. So what the heck is that? So ultimately, if you brought back employees and paid them less than 75% of what they were previously making in base salary or hourly wage. This doesn't necessarily mean all in, because sometimes there's commissions and tips and things like that. This means base salary or hourly wage. So even in the extent, let's say, that you brought back an hourly person and you brought them back at the same wage, but maybe they were working less hours, right? That wouldn't count against your salary hourly wage reduction because you kept them at the same hourly wage, okay? Now that may impact your full-time equivalent calculation, potentially, but it's not going to impact the salary hourly wage reduction. So what this is asking is we can kind of shortcut this and not have to do this whole kind of complicated calculation looking thing over here, depending on how we answer this. So this question was the average annual salary, base wages, so an example of that is like $30,000 a year, let's say, that's a base wage. During the 8-week period, at least 75% of such employees' average annual salary or hourly wage between January 1st and March 31st, 2020, if they were employed then. So if they weren't employed then you don't have to worry about it. But this is only if they were employed then. Was it the same? Okay. Or did you reduce it by more than 75%? So if you can say, you know what, I only had 3 employees, I didn't change their salary, I didn't change their hourly rate, they were still $15 an hour, yeah, they reduced hours, but I didn't change their hourly rate, then you can come in here and press yes, and watch the colors when you do, okay? So yes, well, looky here, everything just got grayed out. That's exciting for you, and that means you won't have anything show up in these salary hourly wage reductions because you don't have one. Now, what if you're like, I did take some people down. They were making $15 an hour and I took them down to 12 or, something like that. And you're not sure. You could hit don't know or no, but then you're going to have to go through this calculation process. Now, it's really not so bad, even if you do. So if you have a lot of employees and maybe a couple of them did get their salary or hourly wages cut, okay, then you can go through this process. So let me just walk you through really quickly and it'll tell you exactly what to do. So again, it looks complicated, but it's going to tell you exactly what it needs you to do. So like I said, it's going to bring in that average annual salary. That's coming from that biweekly tab. It's calculating directly off the information that you put in there. So if that looks strange, go back to your biweekly tab and make sure that you put in the right information. So then let's say that John, January through March of 2020, he actually, for example, maybe he made the same thing, right? So in this case, it's going to say 100% done. Okay, you don't have to do the rest of the steps. When it says done, you paid him, you're good. You're fine. You don't need to move on. Now, let's say though for Aria, actually, her old salary was higher. So maybe her old salary was $35,000. Okay. So during January to March, she was making 35. And then we were like, you know what, Aria, we're going to cut you down because, just the time period and things are a little tight. So we took her salary down. Well, now we can come over here to step 2. Now, see, it tells you specifically, go to step 2. Okay. So simply for Aria, we can go to step 2. February 15th. So average annual salary as of February 15th. Obviously, as of a date is hard to figure out, but as of the time period, as of that pay period that hit over February 15th, what was her average annual salary? Let's say it was that $35,000 again. We hadn't decreased it yet. It's going to tell you to complete this step. So now we're going to go to another pay period. How many different periods can we put in here? February 15th through April 26, 2020, okay? Let's say again, maybe it had started declining at that point. We hadn't done the full decline yet, but we'll put in 30,000. So now it's going to tell me, okay, I got to go to 2C, right? So 2C is up here. Average annual salary, excluding variable pay for June 30th. So this is basically by June 30th. Did you get their average salary back to what it was? So you'll see a couple of things I'll show you. So let's say, yeah, okay, during our forgiveness period, maybe we paid her a little bit less, but by June 30th, I took her average annual salary back to what it used to be. So now safe harbor exists, which means that nothing ends up coming over here into the reduction wages column for her, okay? Now, just to demonstrate, let's say we brought it back up, but we didn't go all the way back up. We brought it back up to $34,000, okay? All of a sudden, whether you pay her $34 or you paid her $20, you're still gonna have the same salary hourly wage reduction because you did not meet safe harbor. So that's why it's so important that by June 30th, you get these salary or hourly wages back to where they were, even if during that 8-week forgiveness period, they weren't there. So you gotta go all the way back up to what they were before, okay? So when you do that, now you don't have anything here. So that's great. So, and now for Hodor, we don't have to do anything for him because he's a new employee. So we have nothing to compare against. So we can move on from there. So that's really all this is. Obviously, it's going to take a little longer if you have several different employees, but it will walk you through and tell you exactly whether to stop or to keep going. All right, now you guys are about to see the fun part, okay? Now you're like, okay, so many numbers, my head hurts. This is the longest YouTube video of all time, but I'm still here. So we're gonna jump on over to the diagnostic. You guys, this is where the real value is in this. So not only is this gonna fill out your entire application for you, it's gonna tell you things you could change to get more forgiveness, okay? It's gonna call them to your attention. So this is a great process. Don't just wait till after your 8 weeks is over. Go in, do this, project out the expenses that you're gonna have over the remaining period of time that you have, and then see what this tells you could do to try to get more forgiveness, okay? This is something I really wanted to include in here because I think it's so important to have actual actionable advice on what to do next, okay? So let's walk through what this diagnostic tells you. So this first part up top is gonna give you a couple of things you could do to maximize your forgiveness. So in this specific scenario, we didn't have any wage reduction, salary, hourly, it will call that out to you if you do. Our payroll percentage was okay. We hit over 75% in payroll, so that's great. But we're leaving money on the table, y'all. So our FTE reduction, we had a full-time equivalent reduction, right? So even though we didn't get penalized for Tyrion because we were able to hire somebody in their place, right? We still got a little bit of a reduction because we waited a little bit to bring people back. And remember, we had entered that we did not meet safe harbor. So let's go back to step 3 real quick. Okay, so adjusted for the employees meeting the reduction exemption, did you have greater than or equal to your February 15th FTE count on June 30th? So let's say I said, okay, we brought everybody back. They're at their full rate now by June 30th. Then this answer would be yes. I have all those people back on payroll. Our FTEs back to what it was as of February 15th. I would say yes. Now, when I say yes, you'll come over here, and now that is gone, okay? So that's really something that'll show you, hey, you're getting a reduction because you didn't bring people back fast enough. So make sure that by June 30th, you have everybody back on. And if they do, you get that safe harbor and now you're good. But this will call it out to you. If you're getting reduced for something, this will tell you what it is and what you might be able to do to fix it. So the next thing it's telling us here is that non-payroll, we got more money. We got more money to use. So we have some excess money that we can use on non-payroll, and maybe we could think about making some prepayments even. So that's something, again, that in the Treasury guidance, it left a little bit of opening now this time to have paid or incurred for non-payroll costs as well. Outside of business mortgage interest, but things like utilities, things like rent, you could prepay that based on the way the rules are written now. As long as it was paid during the 8-week period, it would count. So in this case, I'd say, heck, landlord, can I pay you for next month's rent already? And I'm sure they would say, heck yeah, you can. So we're going to come over. We've got $2,300 to play with. Let's go look. So let's come back to our loan tracker. And down here, we paid May, we paid June. Well, you know what? I'm going to pay July too. Okay. And that's going to be landlord again. And it's going to be $2,500. Rent. We don't need to fill out the rest for now, but you kind of get the idea. And if we come back on over here then to the diagnostic, well, now we're good on payroll, on non-payroll. We've used it. Yay. But now that actually freed up, now we got extra money for payroll. So now we're not meeting the 75% payroll. We can increase our payroll paid to employees to obtain greater forgiveness. So we got extra money, you guys. I'm sure our employees will not hate that. So if we wanted to, we don't have to. We can decide, you know what, we're just not going to get forgiven for that part. That's totally fine. But if we were like, you know what, heck, free money, I'll take it. We're going to come on over to, let's see, the bi-weekly where you're inputting all of the payroll for your employees for that 8-week period. We're going to come over to bi-weekly. And maybe in this last pay period, we decide, you know what, we're going to give you guys some bonuses, okay? So how much, I can't remember exactly how much we had left. I think we had maybe 3,000, yeah. So maybe what we do is come over here and say, you know what, you guys have been with us for a long time. Thank you for coming back. Here's your $1,500. And you can put it in here as a bonus. If you wanted to, you could also put it into here as hazard pay. I do have hazard pay included in this column just because that if it is something that you're doing in addition to their regular salary and it increases their salary, right? Then you can put it there. But let's just put it here for now that we gave them a bonus for $1,500 each. Well, now we come over here and we're doing a lot better. And now that even freed up more non-payroll. So you can see how this kind of goes back and forth and says, oh, now you have more money for this. Oh, now you have more money for this, right? So there's a little bit of back and forth that you can do in this to try to optimize. And you can keep going to use as much of the money as possible. Now, let's say we said, okay, we don't have any more non-payroll, right? Now, theoretically, maybe we could go try to pay our utilities early. I don't know. But let's say that's all we have. Let's come down to what else this is going to tell us. So your total payroll, $29,900, non-payroll, $9,150. Our total loan was $40,000. So we spent $39,000, but that left us with $950 left over. Okay, not bad. Okay, so now we can come back and you could really spend this if you wanted to spend more on payroll, you could as well. So remember that 75% is a floor for payroll. You could theoretically actually use this additional money for payroll too if you wanted to. So you could use it for non-payroll or you could use it for payroll. So that's kind of what this is going to tell you. It's going to come down here and do your full-time equivalent count. Basically, it's showing that reduction, but remember, because Safe Harbor was met, it didn't hurt us. And then we're going to come down to the forgiveness. And this is the part that's going to kind of summarize, okay, $40,000, we were forgiven for $39,000, but remember, we got that EIDL advance too. So we have to subtract that off of our PPP calculated forgiveness. Now we'll be forgiven for $35,000. And the amount that becomes a loan is about $5,000. Okay. So you can either pay that right away and you can say, you know what, I didn't spend that money. So here, have your money back. Or if you needed it and used it in your business, then that becomes a loan over 2 years at 1% interest that you start payments on in 6 months from when you received that money, okay? So that's really what it is going to come. And then down here, it's going to say, nope, there's a little bit of a portion that will be unforgiven, right? But it's not that significant, so you might be completely fine with that. You don't have to get forgiven for all of it. You can work it out in a lot of ways to try to do that. But you can also say, you know what, that's good enough. So this is really what can tell you, like, look, this is where you're going to end up on this thing. And it can give you some advice on things to do. So remember, do this during your 8 weeks. Don't wait till your 8 weeks is up, because once your 8 weeks is up, you lose a lot of the leverage to be able to make changes, okay? Now, let's jump back over really quickly. We're going to finish this up, I swear. We're going to land this plane, you guys. So here is the PPP loan forgiveness calculation form. Looky here, your application is all filled out. So go ahead and review this. Make sure it looks reasonable. It looks like what you expected. Same thing with this Schedule A. It'll be all filled out for you, okay? And this is what you would essentially give to your bank. So they may have a portal where they'll ask you for the information, or you may actually just give them, print this off and hand it to them or scan it to them. But either way, this is going to give you the answers that you need to be able to apply for PPP forgiveness. And I think if you came to them with a workbook that looked like this and handed it to them and said, here you go, here's all my support with, your payroll reports and with any utility bills and things like that, they would love this. I think your banks would be jumping for joy over this amount of organization if you could provide it to them. If you're wondering again what you might have to provide, back here in the green, remember these are the actual application screenshots, so you can take a look through. If anything is confusing in here, if you want to read exactly what it says about the Schedule A worksheet and how that FTE safe harbor calculation works, it's all back here. Your documentation requirements are all back here. Here are the things that you are going to have to turn in when you apply for forgiveness. That's really important for you to also be aware of. So I would definitely take a look through all of this. Also, your certifications, the things that you are going to have to sign saying, look, I did things on the up and up. This is true. I didn't exceed 8 weeks worth of 2019 compensation for my own compensation. All of that's included on these certifications. So take a read through these too. But really, hopefully you'll find that this will help to simplify it a bit and to be able to just calculate out the things that are important. Okay? So that is really it. Make sure that you come on over to the Financial Literacy for Women Business Owners Facebook group. It's up on the screen right now. We're talking about all of this and I'm answering all your questions. So if you have questions on this, that's a great place to come in and ask those questions, and I can get those answers to you. And you can also be aware of any changes that are being made in the guidance. Also, make sure that you subscribe to my channel, okay? Subscribe to my channel, you guys. It means a lot to me as a business owner. I put out all of this for free just to help you guys navigate through this season. I really want to be here and show up for you. So please subscribe. I really appreciate it. And I hope you guys have a wonderful rest of your day. Bye-bye.